The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Who you messing with up on that 9th floor in cell number 5? I love that movie, Trading Places. Oh, my God. I've seen it probably 40 times from 1983. Anyway, I want to report about the services for Mark Douglas. This past weekend, there were 100 people, came from all over the world, a couple people from Australia, quite a few from Europe, Japan. It was all over the United States. There were about 40 people spoke, and the hockey players from the 1980 team that knew Mark and were there, and it was very emotional. He really touched a lot of people's lives. He's really a good guy. A nice human being, besides being brilliant at what he did, and he helped a lot of people, beat the demons of trading, and you're your worst own enemy most of the time, and he certainly helped do that. His new book will be out very shortly, and I'm certainly going to help Paula, his wife, promote the book, because I was. I read a lot of the chapters already, and it's really phenomenal stuff. Whenever he writes a book, it takes him 10 pages to get one page done, because he's so meticulous at what he wants to try to get across. And the pages that are there that he hasn't published, there should be some really good reading over the years. And I think Paula will be able to, make something of that to help other people too, because he really understood the mental part of this. When he was writing the book, Trading in the Zone, it was in my office in Tucson. We shared an office there together, and the traders would come in, and of course we knew these guys, and they would tell us about the things they had done wrong and the things they had done right, and what was a turning point. And he put this all together in a way to try to help people understand what they really needed to do, about trying to trade for a living, and to make a dent in your financial responsibilities to your family and your fellow man and stuff like that. So he's going to be missed. He really was a good friend of mine. His wife married Sarah and I at his home 8 years ago, and we've been friends for 30-some years. I met them when they got married. And so it's been a long journey. Okay, let's get on to the markets. The big thing I've mentioned many times before, and that is the fact that it's the three things that are going to be moving this market. One is the debt that's out there. The next is deflation, which is out there also. And the third thing, of course, are the derivatives, which Warren Buffett said, derivatives are the weapons of mass destruction. And I have to agree with that 1,000%, because they're unregulated. Ever since the Glass-Steagall Act was repealed by Clinton, these investment banks have been, commercial banks have been able to become investment banks, and that's where the problem lies, because, it's not their money. They don't have any skin in the game, and so, why not take a shot at $3 billion? If you're right, you get a big bonus. If you're wrong, what happens? No big deal. I had a question I set in for John Logan because John is recovering from surgery on the previous show, and the question popped up here just recently at the end of the show. What were those areas of resistance that I was looking at in the S&P? If we were to equal the last rally that we had in the S&P, that would take us up to about 1915. And 1915 in the S&P futures would be a 38% retracement back of the whole move from September the 17th, when we hit 2013. Remember, the old high was at 21.33, so the 382 on that is, it's way up there. If it would ever get there, that would be up around the 1952 level, and there's a possibility that we might even do that. But folks, this thing it's getting weaker and weaker and weaker. Realize, folks, that we're only 50 handles less. We're only 40 handles away from exactly 50 handles away from taking out the low of August 25th. Now, we've already done that in the IBB. We've already done it in the IWM. We've come to the exact 786 yesterday in the Dow Jones Industrials. That happened last night when the bonds were peaking out at 158. That's when the market turned, and we got this 20 handle rally in the S&P. So we'll see, what's going to happen. But the two things that are out there that have just popped up in the last several days that we mentioned are the Volkswagen scandal, because they're the largest company in Germany with 600,000 employees, and their investment arms for financing cars and stuff spreads through a lot of these banks like Deutsche Bank and some of the others, and so it's a tentacles of things that could really go bad. And also Deutsche Bank, as you can we've showed this chart several times here. We'll do it again this morning, but the chart for Deutsche Bank looks just looks absolutely horrible, that it wants to get down to about $3 a share. And before it gets that, it's going to have to be some help from a German bank, would be my guess. If you remember Citicorp, went from 60 to about, I think it went to about $3 or something like that. And then it went to about 50 cents maybe. And then they did a reverse split on Citicorp. I believe it was a 10-to-1 or a 20-to-1 reverse split on Citicorp, and that made it brought because some of these funds cannot trade stocks under $10 or $15. So if you reverse split and your stock is trading at 1 and you reverse split 20-to-1, your stock is now 20, but it's still dog do, but it's now trading at 20 dog do's instead of 2 dog do's or 1 dog do. So that's how they get around that. I mean, this is another trick that the old banking system likes to play our things. Just like if the stock splits 3-for-1, people think they have 3 times as much stock. Not so. It's just that you have 3 times as much stock at 1/3 the price. So we'll see what really happens. We opened sharply lower in the DAX this morning, down about 200 points, and it came back to get unchanged on the day, which is not unusual because, we have this situation of that lunar eclipse and the full moon that should give us a little bit of a bounce, and that's about all I believe that's all we're going to get when we come up to this level. Those of you that have not been around, it would really behoove you to go back into Google and type in long-term capital from 1997. That was John Meriwether's investment vehicle. They had 3 Nobel Prize winning economists, and they had made money hand over fist for 8 or 9 years. And what happened was the market got too big for them when they were not able to get out of it. There was no other side to take the trades, and the Federal Reserve had to come in and save them. And that was the old too big to fail thing anyway. But anyway, that's what neither here nor there. But this is what we run into. It's just a normal thing of watching some of these things move like they are now. Volkswagen was down another 3% last night. But the bigger news, I thought, was coming out of Asia, because we had the Nikkei was down 4%, and both of the Chinese stock markets, Shenzhen and Shanghai, were both down just about 3%, and the Hang Seng in Hong Kong was down 2.5%. So it's starting to permeate across to all areas. On the previous show I was doing for John Logan, I talked a little bit about the emerging markets, because here again, we live in a global society, and I wanted to show you that globally, all of these emerging markets, which are in far, far worse shape than we are continuing to go down. We just had one of the stronger rallies from August 25th into September the 17th, which was a typical ABCD structure, and now we're giving almost all of that back. And if we go below the low of August the 25th, that's going to break the 61% retracement on the long-term weekly cycle. And the 786 on this doesn't come in till about 25, which is another 25% lower from where we are right now. So this is not the time to be looking for a bottom here in the emerging markets, it looks like. So we'll have to, I'll wait and see. If you look at that emerging market chart, I think that's what you're going to be looking at down a few weeks from now when we're watching the charts for the Dow Jones and the S&P and the NASDAQ. It's going to be pretty much the same type of a chart pattern. These charts just look flat out bearish, folks. I have nothing to do with the fundamentals. I don't know diddly squat about it. I have a master's degree in business, and if you ask me to, and I took the accounting test and all that, didn't pass it, but I took it. It was a tough test. The pharmacy test was easy compared to the CPA exam. But anyway, the charts just look bearish. If prices are going down, there's more sellers. If prices are going down, there's more buyers. That's all you have to worry about. So they just look lower. That's all there is to it. We've looked at the breadth. The breadth is just continuing to look like something out of a horror movie, and we'll see, and that's spelled with an H, by the way. So you'll see if you'll see this one here. When you look at the breadth on this, it still continues to go down, and more new lows and new highs, more declining volume than advancing volume. And what's bad about this is this hasn't accelerated yet. We have got very little volatility compared like we had in 2008 yet, and it's coming. And, we're going to see some days. It's just going to be some scary days where, things look like they're, getting ready to, go down and make a flying Walinda, which those of you that might not remember them, but the Walindas were a Polish family, very famous in the circus community for their acrobatics. And they had a very terrible accident happen in South America with the leader of the thing, and that's where the flying Walinda is. He missed a wire and flew down 40 stories in between two towers over in Rio de Janeiro many years ago. Okay, we're going to take a look here at the VIX index, because this is still not showing any fear. Now, we have, luckily here at TFNN, we've got Basil Chapman coming on in another hour or so, and he is the expert at looking at this VIX index. But, there is no fear in this market as of yet. It might come, like what we had on the 24th of August, and I believe we're going to take that out without any trouble. We will get the VIX above that 55 level easily. The old high in the VIX, I believe, was 106 or something like that back in March of 2009, I believe. It was around that time. It might have, no, I think it bottomed in November of 2000, or topped in November 2008 at 106 or something like that. But I believe we're going to make at least 80 on the VIX before this thing is finally over. And I'm not looking for a real significant bottom till we get down around October the 2nd. Okay, we're going to take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com tfnn.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to shift gears here a little bit because we had an exciting thing, well, exciting for me, and that is the platinum market went down and completed a ABCD pattern, as you can see on this chart. It also made a butterfly pattern. If you'll look at that point D on the blue line, that was the low of the day. In the platinum, the low came in at 899.90, and that D point was at 901. So it hit that. It's rallied about $15 an ounce from that level. So this could be a pretty good bounce here in the platinum. What's interesting is that we're higher bottoms in both silver and gold, and silver in particular, you know, had a lot of support down there at 450. We went below that last night. Just very, very, I happen to be watching that because I have a position in the silver, and I wanted to see how it acted around that time. And it actually went below it just a little bit for just a few minutes, and then it popped right back above it. And we haven't really done much as of yet, but at least it's held it for the short period of time. And there was quite a bit of volume last night in the silver, given the fact that it was the middle of the night over here and, you know, early morning, you know, over in the UK. So that's what I'm watching in some of these metals. I just don't believe that when this final leg of whatever this financial crisis we're in hits, it's not going to be just there's not going to be the place to go to bonds or anything like that. They're going to be looking for someplace really safe, and I believe that it might be gold. But that's just my guess. I don't know for what that means or anything or not. We had some good information from one of our dinners here at TFNN. Mr. Marshall, God bless him, sent me some information about the 1987 VIX on October the 19th. It hit 172, believe it or not. I wasn't even aware of that. In 2008, I believe we got to 106, as I recall. So you can imagine what this thing can do. But we don't want to go through what happened in 1987, folks. That's just not a, really is not a fun thing to really see, what's happening here. That's the bottom line. Now, the other question that someone asked me, and I think I might have. I'm only hitting on about 2 cylinders this morning, but we did this already, and that was about the S&P. What the resistance levels are in. The three resistance levels that I'm looking at, the first one is at 1900, and that would be equal to the last rally that we had on Sunday night, where we rallied 30 handles. That would get us to an equal rally like we had before. I believe we're in a rally mode just because of the full moon and the lunar eclipse that we had on Sunday, and the market was extremely oversold at that time. But I believe we are going to go lower. Folks, you just can't have something that's happening in Europe with Deutsche Bank and Volkswagen that will not affect the rest of the economies, because it permeates through too many things. They say that Deutsche Bank, and I mean Bloomberg, because I was watching a special on it yesterday afternoon, is it has $85 trillion in derivatives. That's a trillion. I mean, that's a lot of money. And what if the counterparty risk on only 10% of that doesn't come up? Then you're looking at some real serious stuff. And counterparty risk is that you buy something from somebody and they don't deliver. That's the problem. When you're in the floor trader, which I was for several years in Chicago, the thing that you had to worry about, your biggest risk as a floor trader, was an out trade, and that was you did a trade with somebody in the pit and they didn't recognize it, and they have an out trade clerk that matches these up, and some of these guys were really very, very vicious and not very scrupulous, and they only had 3 strikes. So if they had 3 out trades, that was it. You were just banned. They just took you off the floor, because it was a agreement that this is what you had to honor. And that happened to me the first day, and I wasn't aware of it. It was a 6 lot in Treasury bills that amounted to about $6,000 that should have been my profit. And then what happened was the other party did not take the other side of the trade, so poof, my $6,000 was out the window. He was off the floor, but I still didn't make any money. From then on, all I did was I stood on the outskirts of the pit and held my paper. Whenever I was ready to put an order in, I would hand the paper to the broker instead of calling him up and have the runner come into the pit. I just handed him the ticket. It cost me $2 per contract. So if I did a 10 lot, it cost me $20. And then when I got out of it, it was $20. So I was paying $4 a trade, which is pretty much what I'm paying right now. But I had instant access of what we're doing. Okay, we've got to take a little break here. We've got the stocks getting ready to open. We're going to open quite a bit stronger, but we'll see if it holds up. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the chart of IWM. It looks very similar to the chart of IBB, the biotech index. They took out the August lows, which is August 24th lows, which were, substantial. And so we'll see what happens. Now, the Dow Jones stopped at the retracement level of 786 last night, as did the S&P when it got down to the 1860 level. But if we get below the 1860 in that S&P, we're looking at a much, much lower price. In fact, I will post this in here because this is my original price for October the 2nd. I'm looking for the market to come in around the 1750 to 1725 level. That's about 150 handles from where we are. Now, you might think that's a lot, but remember, we covered 150 handles. In fact, we covered 300 handles from July the 20th down into August 24th. That was only two and a half weeks. So we've got 8 more trading days to possibly get down there. So that's what I'm looking at as a potential in the S&P for a bounce off of this, and then we should have a pretty good bounce. And in October the 2nd, let's try it again. October the 6th. That's a day that I get from Erminometry, Bill Ehrman out of Nashville, Tennessee. It also coincides with the Bradley, but Bill Ehrman is far, far better than the Bradley. He's the best I've ever seen in my 55 years of saying when the markets are at critical turns, and he does this by using numbers from sacred geometry. Ironically, he's never traded before. He's 87 and Harvard trained. I believe he's in the liberal arts and music, as I recall, but he's just never actually traded. But he's had an interest in the stock market, and he came up with this theory and showed me a few years ago, little by little. And recently, I've got to see a bigger glimpse than I've ever seen before, and it basically proves what I thought all along, is that there is order in the market, and is all related to these numbers of the Fibonacci sequence and sacred geometry, all of which are interconnected. Neither here nor there. We want to watch October 6th as a potential bottom. Then we should get a good 2-week rally from there. And then the big part of the move will start down, and we're going to go down, quite a ways. I don't know how far it's going to go down, but if you remember 2008, we bottomed right at a 61% retracement of the low from 1982. So we're probably going to do at least 78% of that last move that we had, which would take us down to about 9,000 in the Dow. So we'll see what's going on. We have some good internals in the market starting out with the New York Stock Exchange. There's 1.5 shares up versus each share down. So that's beginning to start look pretty interesting. So we'll see if we hold up today and rally for the rest of the day, or if we'll back off. What's interesting is we've already now lower on the day in the Nasdaq after being up over 22 handles. It's come down, and the Dow is actually down on the day now after being up about 100 points. So there's selling coming in, and there's a reason for it, folks. This market's bearish. I mean, just look at the charts. I mean, you don't have to be a rocket science. Take a look at your 200-day moving average. Where are the stocks? Look at your 50-day moving average. Where are the stocks? I mean, this doesn't look good. That's the bottom line. And you don't want to try to catch a falling knife. You don't have to. Just be patient, and the market will come to you to buy some things if that's what you need to do. But right now, I don't think that's the way to do it. Now, we're still having, problems in the commodity markets. They're still going lower. Like platinum made a lower low today before, bouncing about $15. And, we're not even sure if that's a good bottom yet. But the Australian dollar, and also the New Zealand dollar, and also the Canadian dollar are all making new lows. So it's telling us that these commodities are still under a great deal of pressure. Now, the Canadian made a double top from last week by just a few pips, and now we're trading below the 134 level, but just barely. So we could still go up higher than 134 and change easily in the Canadian dollar. So we want to watch that with a great deal of importance too. So the commodities have not turned the corner, and I think it's going to be hard for the market to make any progress unless that turns. In the first part of the show that I was doing for John Logan, I brought up the point about what's happening to the price of Wynn stock, Wynn Casino, because 50% of their business comes from Macau, and as you can see, what's happening with the earnings of and the price of the stock of Wynn, something happened to this thing way back in February of last year, and it's given back about 90% of its value and still going down to this day. So there's something not right over there. They're not coming to the casinos like they were before. In fact, the Chinese government had a ban on going to Macau more than 3 times a week, I believe, for some of these guys that are really big hitters, that have some of this People's Republic money, funny money like we have here for quantitative easing, and they were gambling it all away, so they put a restriction on it. Then they took the restrictions off, and there's still not people coming. So they just don't have the money to like they did before. We have a friend, Sarah has a friend that really loves to play mahjong, and she goes over there and she's saying that the crowds are, about 25% of normal. In other words, it's about, only 25% occupancy on these things. So we'll see what's really looking at it. Now, we've had a request here to take a look at the Japanese yen chart, which I'll do here. This is the dollar versus the yen on a very long-term basis, a weekly chart, and this was the home run of home runs, folks. 3 years ago, when our esteemed leader Tom O'Brien came in and coined it King Dollar. I remember him saying it because we were trading at 75 in the dollar yen, and we went all the way up to 123. And I happen to know that the dude was riding that horse with full throttle and strapped into the saddle. Now, we've had two major corrections. You'll see on this chart, you'll see the two equal corrections that we had. We had one in 2013 that stopped at the 382 retracement, and we just had another one 2 or 3 weeks ago down at that 115 level that also stopped at the 382 level. So as long as we stay above that level in the dollar yen, we got a chance, to make a even more significant move to the upside. Remember, this chart that you're looking at, trading here at about 120 and change, the old high in this was at 360 and change back in December of 1989 when the Nikkei was topping at 39,000. And I remember that so vividly because CNBC had a special where they took a $1,000 bill, the picture of Grover Cleveland, and set it on the ground in front of the Imperial Palace and said, this is how much land you can buy in Japan for your $1,000. It was 2 inches by 3.5 inches. It was really a small amount. Couldn't even put an indoor toilet in on one of those, so it's pretty tough to see how that works. So we'll see what happens with this. Someone's asked a question here about how the rich Chinese use Macau to wash the money. No, they don't allow that over there, folks. They have a really strict way. The reason why I know that is because one of our friends happens to be a pretty big gambler over there. Not multi-million, but he gambles enough, and they watch the money coming in. You just can't take in, bring in like $50 million and take $50 million in cash. What you bring, it's money doesn't play there. In other words, you got to convert it into chips, convert it back to chips, and they got to keep a track of where you are. They're not stupid, and you'll never convince a casino of being stupid, because they make money just by having the place open. The problem is their edge gets too big sometimes, and then they strip everybody their money, and then there's no more customers left. This is not the case what's happened in Macau. It's just the customers are not coming in because they don't have as much money, because China has been in a major recession here for the last 18 months. We can see that in the commodity markets. We can see it in their stock. So we'll see what it looks like. So we'll keep an eye on it as we move through the trading week and stuff like that. So we'll see what happens. So we started off this morning. Now we got the S&P down on the day. We got the NASDAQ sharply lower. We got the Dow down 50. Folks, this thing don't look very good, buddies. Be kind to yourself. Don't get too bullish in here. The S&P should have some support at 1870. If it doesn't, it's going to 1550 to 1750 sometime. Well, my target for this is for 1750 on October the 2nd is what I'm looking at for a potential for a move is what I'm looking at. So and I'm wrong a lot too, and hey, boys and girls, I'm treating you like children. What the heck is wrong with me, folks? We live in a terrific place. Here in the United States, we got lots of problems, but we also have a lot of wonderful assets. And no matter what happens with this, we're going to come out of it really good. What's happened is, in my opinion, and I see Carl Icahn came out today with pretty much the same opinion, and that is that what the Fed has been doing is going to go down into history as one of the greatest boners of all time. I mean, just where you just did something really, really stupid. You just can't keep pumping money in it thinking you're going to keep things up. It was an experiment done by Ben Bernanke, and Bernanke's article on his thesis was how to prevent the depression, and he's going to cause a second one, in my opinion. So we'll see, and we'll see what's really going to happen. I don't know. A question has been brought to our attention here that the China manufacturing is terrible, but the service industry is still okay. I can't agree with that, because if you look at the price of the companies that do the restaurant business, Kentucky Fried Chicken, 7-Eleven, and these other companies that are over there, those stocks have been going down also, and so that's pretty much pretty much going to see what's going to be looking at it. So we'll see. So the market is weakening up a little bit, not to be unexpected, because this last move was nothing more than what we call the proverbial dead cat bounce, if that is in fact the case. But we'll have to wait and see if this is what is going to happen. That's all the bottom line. But no matter what, we will come out of this fine. I don't believe we're going to see a crash like we had in 1987. This time, I think we're going to see a sharp down move, but I think about as close to a crash as we had was on August the 24th, and when the Dow was down 1,100 points in the first hour, and the NASDAQ was down 170 or whatever it was, down the limit. And we'll probably have some more volatility, of course, because we haven't even reached the volatility levels that we had from 2008. We're not even close to that right now. As you can see here from this chart that shows the comparison of volatility of then versus now, we went through a period of 3 years where we had virtually no volatility. There were, I don't know how many days it was. I think it was a year and a half where we were within a 1 or 2% band in stocks of the S&P, where it never moved higher or lower than 1 or 2% on its way up, So we'll see that. Someone's said we could have mini crashes. Well, of course we're going to have that kind of stuff. That's just all part of the all part of it. Someone's asked a question about crude oil. I didn't bring crude oil up because I don't think it has the same relevance that it used to. But we did stop exactly at the 786 last night, down at that 44.50 and change, as long as we can stay above that. And I don't think we can, because I think we're heading down to at least $43 in crude oil. That's what it looks like to me. And we'll see if that's going to hold, and then we'll know more of that. But we could get a test of the bounce here. We'll see if it's going to hold. But right now, we did sell off, starting out. Whether it's going to continue to hold or not, certainly remains to be seen. But it's still real early in the game. Wow, we came all the way down. We're almost back to those lows in the NASDAQ and the S&P already. Hang on, folks. This might not be a very good day today, so we'll have to wait and see how some of this stuff is going to react. Right now, we are just coming down. We made the 786 retracement of yesterday's low in the S&P right now as we're speaking. The NASDAQ, we have, we're taking that low out almost. Yeah, we're almost at 80% on the NASDAQ, so we're very, very close into that area. But frankly, we'll probably hold that level would be my guess. I'm not sure, but that's just my my ballpark guess that this is what might happen. So we'll just wait and see. The gold doing very little. We're up a little bit. We're starting to move higher, which is good for silver, which colors me happy. And we'll see. I'm in more gold than I am silver. I hardly ever trade silver. I buy silver because I love the silver coins, but gold is the one that I do like to trade. So we'll see how these things end up. But we are at a real critical level right now, getting ready to test some of these lows. We did make a new lower low in the IWM, and whether this is going to be the bounce or not, we'll have to wait and see. But we got some real serious selling coming in right now, so we'll see what happens. Watch the bonds, folks. If we get above 158.20 in the bonds, you don't want to be long stocks. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're still under midst of a little selling this morning. You know, we got the S&P down, the Dow down, and the NASDAQ down, but it's still real early, and they're probably jockeying for positions in here. Like I mentioned before, keep an eye on that Treasury bonds, because if we get those above that 158.10, 158.12 level, that's going to tell us that you know, there's some more selling coming into the market, and you'll be looking at something a lot more sinister than you might want to begin to believe. So we'll wait and see. So far, the S&P stopped at the 786 retracement of last night's low, down around 1860. That came in at 1866, and we stopped there spot on And as long as that 1866 holds, we should be moving towards a better day today. And it wouldn't be surprising to have the market make a bottom in here because of the fact that there should have been a cycle low of some magnitude based on that full moon and lunar eclipse that we had on Sunday. But overall, it just looks very bearish. You can see how quickly the market gave back, 15, 20 points in the S&P and well over 60 handles in the NASDAQ. So it doesn't take much, once these things, really start to move. We're having really good volatility here in the NASDAQ too, because it's almost it's already made a 50% retracement of the low to the high, or high to the low. Let's know from the high to the low, it's already made a 50% retracement of that move just in the time that we've been on the air here, and the market's been open 25 minutes. So it's been a very, very quick move. And as you can see, these things, once they get to these levels, it takes a lot of guts to step in and buy, and that's what happens early in the morning, especially when they gap down. This time they didn't gap down. They just opened lower. There was more selling. That was probably more selling coming in from what was left over yesterday with the Dow down, 350 points. And with the little extra this morning, that means the Dow was down, well over 400 points yesterday. So we're due to see a bounce come in here. We already have an idea of the level we want to be watching the bounce. So this is it. So live every day in an attitude of gratitude, and may God bless. And thank you for putting up with me today. And hopefully we'll have John Logan back in the saddle tomorrow. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.